Yeah, so just came back from the gym, super ready for the day, So right now what I'm gonna do is I'm gonna jump on the chart just to see if I'm gonna get any opportunities for the day. And if not, that is fine as well. But before that, I have to shower. So let's do that and I'll see you on the chart.
Ice in my veins, I've been driving this train. Years in this lane, there's no stopping this flame. Cause I came to the game and I changed it to play how I like, rearranged it to my own domain. Yeah, I got what it takes.
Hey guys, so I'm done with my analysis. I'm not really seeing any setup right now. So I think I need to give the market some time in order to be able to, spot good setups. So that's what I'm going to do right now. But before that, I just want to speak on something that I believe is going to help you as you journeyfy in your trading career. One thing that I know is that the ability to make money in the market depends on how well you can spot a good setup. So having said that, I just want to take you through the technique that I use in analyzing the market in terms of my top-down analysis, because top-down analysis is very important. It helps us to spot the overall direction of the market. You understand? Yeah, so let me just get on the chart and show you what I want to show you. So let's do it. Whenever I'm doing my analysis, I want to start from the higher time frame, such as the weekly. I want to come down to the daily and then to the 4H, and then I'll come to the 1H and like that, before I get my entry on the lower time frames. The main reason why we start on the higher time frame is to, as I said, look at the overall direction of the market. That is one, the benefit of top-down analysis. And the second one is it helps you to stay aware of a trend at a certain price point, which helps you to avoid unnecessary losses, So for example, if this is the daily structure, we're creating higher high, higher low, higher high, higher low on the daily, right? And then we break this low right here on the daily time frame. If you understand market structure, this is now a bearish structure because this previous low has been broken. So if you go down the lower time frame and we see price just pushing to the upside like that, on the lower time frame, such as the 4H time frame, we might see something like that, right? We might see a lower low, lower high, lower low, lower high like that, and then we'll see the structure being broken like that. So on the 4H time frame, it will be an uptrend, right? But you need to understand that on the daily time frame, this is still bearish. As long as this high is not being broken, this structure is still bearish, right? So the top-down analysis will tell me that if I go down the lower time frame, such as the 4H, and I see something like this, lower low, lower high, and then this high is being broken, and then we are creating high highs and higher lows. Since I did my top-down analysis, this is telling me that I need to be careful. I need to be aware that this is bullish, yes, but on the daily time frame, this is bearish, because as you know, when we have a pullback, price can pull back to the 50%. If you are using a Fibonacci to draw, we can pull back here and then price will drop. We can even pull back here and then price will drop. We can come all the way to the upside and then price will still drop. This is still a bearish structure, right? But the very moment we break above this, we will have a continuation to the upside, So when price is creating high highs and higher lows, high highs and higher lows on this 4H structure, yes, we can be buying, but you still need to be mindful of what price is likely to do, because we could just create something like that and price will just shift, and then you see the market aligning with the overall time frame. So this is the main importance of doing top-down analysis. It helps you to stay aware of price at a specific point. So let's take a look at this example, Euro USD. The daily time frame, if you look at the structure, we were creating higher highs and higher lows, right? And what did price do? We took out this previous low, which means we shifted from bullish to bearish, right? So as long as this previous high that took out this low, that is this high, right? This is the high that went down to take out this previous low. As long as this high is not being broken, we are still bearish on the daily time frame. So if you look here, we had a nice pullback right here. Let me just go down on the lower time frame. On the 4H structure, we had a pullback, but if you look at the 4H structure as well, the 4H shifted from bearish to bullish. This previous high got broken, right? We had a lower low, lower high, lower low, and then we took out this high. Price just impulsed to the upside. So if you are just sitting on the 4H time frame thinking that, okay, this is a bullish structure, so you are just waiting for a pullback, or just scaling in like that, you will see price reversing. It's not always like that. Of course, this is a pullback. Price can pull back all the way to this level before going to the downside. Price can even just go all the way up and then break through. But what I'm basically trying to say is you being aware of the higher time frame structures and also being careful on what price can do on the lower time frames in terms of a reversal. going to the downside. And this is something that I'll speak about in this session, so stick through to the very end and you'll be able to understand what I'm basically trying to explain right here. The ability to spot a reversal is very important, especially using candlestick patterns and market structures and certain dynamics in the market that I'll speak about here. It's very important. Another thing that I also want to point out is when price gets to a weekly high or weekly low, or a daily high or a daily low. That is your higher time frame highs and lows. So for example, if we have the daily time frame creating lower lows and lower highs like that, right? And then we have price pulling back all the way to the previous high of the daily time frame, something like that. What are you supposed to do? Of course, this is still a bearish structure because this previous high has not been broken, but since you are using the daily time frame or the weekly time frame for your overall structure, you need to also be very careful when it comes to the candlestick patterns and all these things, right? For this structure to break the previous high, I want to see a candle that will pierce through the previous high like that, right? So I want a close above the previous high like that. I don't want to see a candle a wick just piercing through. I don't want to see something like this. No, this is not a break for me, right? These are just rejections that is telling us that the buyers are failing to break above, right? This is not a break. A break is when we see a full candle body just closing above this level. When you are using multi-time frame in your analysis, you need to also pay attention to these things that plays out right here, right? So for example, if you see a wick on this daily time frame, if you go down on the 4H or on the 1H time frame, this is a structure on its own I need to pay attention to, especially at this level, because we are at the daily or the weekly high. So you want to see what price will do here. Important thing about approaching highs and lows is, one, how price gets there. Are we getting there correctively or we are getting there impulsively? And second is about how we break the high. Did we break the high impulsively? And if we did, what did price do after breaking that high? Did it give us a correction structure that it's indicating that price is going to continue, or price is telling us something else that it will reverse even though this has been broken, right? So these are all things that you want to pay attention to. So let me just go on the chart and show examples of what I'm talking about. So let's take a look at this example. We have this lower low, lower high, lower low, lower high, lower low, right? So this was the previous lower high that price created before breaking this previous low to create a lower low, right? We had a nice pullback. This was a deep pullback to the previous high. So as it stands, this is still very bearish because the previous high has not been broken, right? This is what I'm basically trying to explain. So we are at a daily high, so we want to really pay attention to what price is doing here, at this high. So if you look at the daily, you can see that this is a wick, right? Price is trying to pierce through that high, but it's failing. This is not a break for me. A break is where we see the candlestick just closing above. But if you go down the lower time frame, you will see that it has already been broken right here. Take a look at this on the 4H time frame. So on the 4H, you can see price broke above, and then we came back in, dropped, and then price broke it one more time, it came back in. So if you are just on the 4H, probably you might think there's a break of structure, but you need to have that time frame that tells you whether price has been broken or not. That is the daily time frame. It could be the weekly, based on the market structure, based on the highs and lows. With this example, we are using the daily high, so I just want to see whether the daily high has been broken on the daily, right? So here, since this is playing out here, this is where you also need to be very careful in terms of the dynamics of the market, using patterns, using candlesticks. You want to see what price is doing at this level. What is your understanding of what price is doing here? Is this telling you that price is going to push to the upside or price is going to go to the downside? And this is something that you also need to be aware of. Maybe I'm just going to add this as a bonus for you to take this home and apply it on the chart. Whenever we have a high like that, I'm just teaching you some reversal patterns. One pattern that you are all aware of is probably a rising wedge where we have price approaching a high correctively like that, and then eventually drops. This is a rising wedge pattern where we all know that it's gonna reverse, or head and shoulder, or double top, double bottom, and all these things. But there are certain dynamics in the market that you also need to be aware, especially when we have a high that price broke impulsively and then came back impulsively again. For example, we have this let's say this is a high, right? And then we have the market just creating higher highs and higher lows, approaching that high. We break that high impulsively. It comes back again impulsively. So there's an impulse, there's also an impulse, and then right away it gives us that rising wedge pattern or a flag pattern. This is an indication that price will drop. There's also a reversal pattern. So it's basically having a high, right back in, correction, and then a drop, right? So this is something that you also need to pay attention. You can go back and back test, and you see a lot of them at these highs and lows. So right here I have something similar, though this is giving me, you know, head and shoulder kind of structure. If we have this correction, this will be head and shoulder, but just consider this. Look at how price broke above, came back in impulsively. Take a look at this, how price also give us that correction, you know, like that, right? So this is what I'm basically talking about. You can see price is giving us that nice correction right after breaking and then coming back in, you know. So what I'm basically even teaching you right here is about what you need to do when price approaches that daily high or the daily low, you know. Looking at the candlesticks and going down lower time frame to look at structures playing around that area is very important. So you can see how price dropped without breaking above, simply because we didn't have a daily candle breaking above that level. So this is the current price of Euro USD. Let's go to the weekly time frame and I'll show you a similar example. So this is the weekly time frame of Euro USD, right? We're not gonna go back. Just take a look at the structure from here. We have a low, we have a high. Price took out this low, created a new low, and then price pulled back to the weekly high. So we were just sitting at the weekly high. So as you know, as long as this high is not being broken, price is still bearish. So now take a look at this. Price came to this weekly high. If you look at the weekly structure, we were just, you know, having these wicks, right? So it's not a break for me on the weekly time frame because these are just wicks. So I want to go down the lower time frame, or the time frame lower than this, just to see what price is doing. So if you go to the daily, let's take a look at what price did, right? So the daily price got to that level, it dropped, and just take a look at this area. On the daily, you can see that the candle closed above. Remember, we saw this as a weekly high, not a daily high. So if this daily breaks above, that is not even the main thing. We want to see a weekly candle breaking above. So the fact that this daily candle broke above, obviously we're not going to start buying right after the daily broke above, right? If you remember what I said, when we're approaching a high, how we get there is important, and what price does after breaking is also very important. So let's go down again to the 4H time frame. So what happened right here? Price broke above this level impulsively, like that. Then we came back right in impulsively, and then what happened? Had this nice correction and price drop, right? Similar structure, similar pattern as I showed you in the past, you know. So this is what happens mostly at these weekly highs and weekly lows. You want to see what price is doing at that level on the lower time frame. Yeah, so let's also take a look at this reversal right here. If you remember, I said I'm going to speak about this. This was the previous example that I used where we had the 4H shifting from bearish to bullish, but the daily was still bearish, right? So let's take a look at this on the lower time frame. It's the same structure that played out right here, where we have the impulse, price dropped impulsively, we have this structure, and then a drop, right? So let's take a look at this lower time frame. So we're going to go on the 1H. Let me cut this right here, right? So what happened? We had price moving impulsively to the upside like that, and then it dropped impulsively, and then we had this nice correction phase, right? So this alone is just a sign that price is likely to drop, because on the daily, you remember the structure on the daily is still bearish, right? So the daily gave us a high, low, high. We took out this low, and then this was just a pullback. So seeing this structure that I just explained at this level right here, seeing the same thing right here, gives us a clue that price is likely to drop, right? So this is a reversal structure as well. We can go back and back test, as I said, and you see a lot of them in the market. So let's come here. This is the weekly time frame as well. I'm gonna cut right here another example. All right, if you look at the weekly structure, just simple, right? We have a high, price pulled back, another high, price pulled back, another high. So this is an uptrend, and this was the previous low. So as long as this low is not being broken, the weekly is still bullish, right? So if you look at the weekly, you can see we have these wicks presenting itself at this level, right? But if we go down on the daily time frame, if we should zoom in, you can see that the daily candle broke below it, right? So the fact that the candle broke below it doesn't mean that necessarily price is gonna drop, because we spotted this low on the weekly time frame. So we want to see a weekly candle breaking below that level. So here, this is where we want to spot what price is going to do after breaking this level. Are we going to see a nice correction to the downside, which will indeed confirm a candle closure on the weekly, or we're going to see something else? So let me just go down on the lower time frame as well. We go down to the 4H. Let's see the structures that played out over there. So price broke that impulsively, then we had this nice correction. Let's go down to the 1H as well. If you take a look at the 1H, we have price just moving correctively, and if you understand patterns as well, you know that this is a nice falling wedge pattern. This is a reversal pattern, right? So yes, price broke this impulsively at this level, but this pattern is just telling us that price is likely to reverse, because this is a reversal pattern that is playing around that weekly level that we saw, right? So how we approach a high, or what price does after breaking a high or a low, is very important. So right here, you can see price just came back in and then gave us this nice correction and then impulse to the upside. So I can go on and on and on and show you a lot of examples, but I'm gonna just leave that up to you so that you can also use that opportunity to backtest and also practice. So I hope you really enjoyed this session, and I hope you learned something from it. Don't forget to subscribe to this channel, because I'm just gonna do a lot of these things so that you'll be able to learn and also implement in your trading journey. So like this video, subscribe, and also join the Telegram group. The link is in the description. Yeah, I'll see you next time. God bless you, and peace.